All right, we got earnings coming out of the retailers, Abercrombie and Fitch. One of them better than feared results, I guess, is the way to think about it. Mary Ross Gilbert joins us, senior equity analyst covering the retail space for Bloomberg Intelligence. She's based out there in L.A. Mary, thanks for joining us here. Talk to us about Abercrombie and Fitch. What did they do? What's going on? I see the stock trading higher today.
Yes. So, Paul, what's going on with Abercrombie and Fitch? I think that's probably a good tagline, better than feared. I mean, look, they missed on the comp sales line. Comps were down 1%. And when you look at, and the estimate was for a slight increase, almost flat for the quarter. But they did have a couple of things going on. One, they had the implementation or the upgrade of their ERP system. That cost them about 50 basis points in the top line, but I don't think that really affected the comp because it was really third-party sales there. So think about sales that are made to Nordstrom, for their Abercrombie brand, as an example. And then what we saw with Hollister, so Hollister comps were down 2%, but they were also impacted mainly in the Middle East, where we saw weakness there, and other parts of Europe. They didn't get into specifics on those other parts except highlighting their largest market in the UK, which they indicated had strong sales. So we're still seeing, I think, when you look at the guidance for the second quarter, maintaining guidance for the full year. So guidance for the second quarter is at the high end of consensus estimates for about a 4% growth. And there's likely upside to that. And so I think seeing overall strength, strong sell-through of their collaboration with Sperry in the quarter and their styles, how they're broadening their categories, going after more categories, and that's what the consumer wants. And I think those are all very, very encouraging for the brand, and that's the reason why you're seeing strength, we think, there in the shares.
Mary, we're hearing time and time again, consumers becoming more selective, trading down to cheaper items, but Abercrombie has been kind of a standout. What are they doing to outperform peers, and are any of the markdowns and promotions that they're putting out kind of starting to pressure margins at all?
Yeah, we're not seeing the pressure. I think what's happening is they're raising prices to help mitigate the impact from tariffs. And so some of those are coming through. But we did notice, and I think other analysts noticed as well, there were more promotions this year, or I should say, not necessarily more, but the magnitude of the promotions were a little bit higher, meaning the discount was higher than it was, let's say, a year ago. Though the company indicated that their promo activities were absolutely on plan for the quarter, but that doesn't mean that, it definitely seemed higher than the rate of discounts for the first quarter. But generally, I think they're seeing some real resilience. And when you look at their cohort, so for the Abercrombie and Fitch brand, that's the millennial customer, but they're a higher income customer. So they tend to earn over 100,000, probably, 100 to 200. And then when you look at the Hollister brand, and that's a little more value oriented, and there they did have some discounting going on there. But that really hits the Gen Z. So kind of think about your high school age consumer. So I think that they're really hitting the mark on styles, collaborations, and their marketing campaigns. And that's something they plan to invest more. That's where you're seeing the hit on margin is really the marketing investment, and then also the effect of tariffs. And then they're concerned, of course, that on the back half they will have a freight headwind, but in the first quarter it was a tailwind, and there is going to be a small tailwind, I think, that they expect in the second quarter.
So, Mary, what are your companies, the retail companies you follow, what are they saying about inflation, particularly for their consumers that are paying more at the gas pump, and how that may be impacting spending?
Paul Sweeney, that is a great question. And what we've seen so far, looking at off-price, is that they are definitely drawing in more consumers. And when you really go after the business like Ross did, then you get a huge beat. I mean, the comp sales that they reported, double digit, was just, wow, off the chart at 17%. But they were very aggressive, transitioning to spring much faster and really going after that demand. So, and I think they are getting trade down. They're also bringing in more higher end brands, for example, Marc Jacobs. And that is drawing more of a higher end consumer that you usually see at TJX. So I think we're going to get more from the value side when American Eagle reports on Thursday, and also from Gap. And we think that Old Navy, should also have some good results there on the value side, because they just continue to innovate with great styles, new categories, performance, with their athletic wear, and they're just getting great traction.
Right. All right, Mary, thank you so much. Really appreciate it. Mary Ross Gilbert. She's a senior equity analyst for Bloomberg Intelligence. She covers the retailers. She's based out there in LA.